class. Last week, we looked at the theory of constraints and throughput accounting. This theory is about how to maximize the profit of the company when you are faced with bottleneck and non-bottleneck operation. We define bottleneck operation as any operation that limits a company from making more profits. Whatever limits a company from achieving more profits is what we refer to as bottleneck. We explained that the objective of this theory, the objective of the theory of constraint, is to maximize throughput contribution. To maximize throughput contribution, we are going to maximize sales less material cost, while at the same time we try to minimize conversion cost and investment cost. For this theory, it is assumed that material cost of cost. The concept of theory of constraints, it is assumed that material cost is the only variable cost. We now move to throughput accounting. We explained that throughput accounting has been developed from the theory of constraint. From the theory of constraints as an alternative system to cost and management accounting in a just-in-time production environment. We explained this. And we emphasize that under throughput, it is assumed that your material cost is the only variable cost. All other costs are assumed to be fixed in nature. We now explain that you can use throughput accounting as a performance measurement. The theory of throughput accounting or the concept of throughput accounting can be used to evaluate the performance of individual products. You can use this concept to evaluate the profitability performance of individual products. You can compute throughput accounting ratio. This ratio can be used to determine the profitability capacity of individual products. Hence, we can use this method to determine optimum production plan when faced with bottleneck resource. We explained this last week. For you to talk of optimum production mix, there must be a bottleneck resource, a limiting factor, a constraint that serves as limitation to achieving maximum revenue. We explained this last week. Thereafter, we solve question number 1. Tonight, we shall look at question number 2, page 133, page 132. Please refer to page 132, question number 2. Oh. All right. I think we are there now. Yeah. PK Limited. We shall review this question tonight to round up. Please, can somebody confirm the page? Page 132. Are we there now? Are we good to go? Our governor, Mr. Jamil, are we good to go?
We are good to go, sir.
Yes, sir.
All right. KP Limited manufactures 2 models of heavy-duty cooking rack suitable for use in restaurants, kitchens, and similar commercial environments. Both models use the same types of raw material and machine hour. Please note that. Both models use the same type of raw material and machine hour. No inventories are held. The sales budget for next year is as follows. Sales in units. Model A, Model B. Selling prices is also given. If you look at Model A, The sales in unit is 300,000. While model B, 40,000. The selling prices is given to us. The following additional information is provided. Our cost data, material cost, variable production conversion cost is given to us per unit. Material cost per unit, variable production conversion cost per unit. Next note. Fixed production overhead attributable to the manufacture of the two models. Fixed production overhead attributable to the manufacture of the two models amount to 40.5 million. Each model is completed in the machine department, in the machining department. The production rate per hour Let's continue with the class. We said the production rate per hour in the machine department is, for model A, 12.5 units will be produced per hour. For model B, 10 units will be produced per hour. Availability of machine hours is limited to 30,000 hours. The machine hour available for production. The total machine hour, please can you mute Ayodeji? The total machine hours available for production is 30,000 hours. Next. Requirements. Requirements A. Using marginal costing principles, calculate the mix in bracket unit of each model, which will maximize the net profit and indicate the value of the net profit. Examiner says, using marginal costing principle. Now the question is, what is marginal costing principle? What is marginal costing? What are the principles of marginal costing? We are going to use the concept of marginal costing to calculate the mix of each model that will maximize the profit of this company. Marginal costing principles or marginal costing is a costing method that recognizes only the variable cost as the cost of a product. Marginal costing is a costing principle that recognizes only the variable cost as the product cost. Fixed costs are treated as period cost. We have explained marginal costing principle. The next question is the mix of each product that will maximize profits. Please note, if you are asked to calculate optimal product mix, if you are required to calculate the mix that will maximize profit, what that implies is that there is a bottleneck resource. There is a limiting factor. There is a constraint that will prevent the company from meeting the maximum demand. I will explain this again. For you to talk of optimal product mix, it implies that that company is faced with a bottleneck resource or a limiting factor or a constraint. These constraints will not allow us to be able to meet all the customer requests. Because we cannot meet all the customer requests, we now need to determine how many units of each product to be produced and sold in order to maximize profits. If you look at the sales budget, if you look at the sales units for model A, The sales in unit is 300,000 units. While for model B, the sales is 140,000 units. Now, because there is a bottleneck, we cannot meet the maximum sales. Because there is a bottleneck operation, there is a bottleneck resource. We cannot meet all the customers' demand. Hence, we need to determine the optimum production mix. How many units of model A and how many units of model B do we need to produce if we are to maximize profit? All right. I won't explain this. We need to determine the bottleneck resource first. We need to identify the bottleneck resource. Unlike the question we solved last week, examiners specify the bottleneck resource. Unlike the question we solved, question number 1, examiners specify the bottleneck resource. In this question, we don't know the bottleneck resource. Examiner did not specify the bottleneck resource. That means we must identify the bottleneck resource. To achieve production, examiner says both model, look at it, both models use the same types of raw material and machine hour. That means to achieve production, we require raw material and machine hours. That means to produce both models, you must have raw material, you must have machine hour. Look at these notes. Examiner says each model is completed in the machining department. Examiner says each model is completed in the machining department. The production rates per hour in this department is model A, 12.5 units per hour. Model B, 10 units per hour. Now, let us determine what is the hour required to produce 1 unit. Working 1. Calculation of machine hour per unit. Working 1. Calculation of machine hour per unit. Please look at it. Examiner says 12.5 units is produced per hour. Per hour. Now the question is, what is machine hours per unit? If I produce 12.5 units in 1 hour, how many hours do I require to produce 1 unit? Hello? If I produce 12.5 units in 1 hour, how many hours do I require to produce 1 unit?
One divided by 12.5.
Correct. Machine hour. Machine hours per unit of model A is 1/12.5. Please compute.
$0.08.
0.08 hours per unit. To produce 1 unit of model A, I require 0.08 hours. For model B, examiner says 10 units per hour. Therefore, machine hour per unit of model B is 1/10. That will give me 0.1 hours per unit. You have gotten the hour required to produce 1 unit. Second working. Calculation of total machine hours required to meet maximum demand. Maximum demand for model A, 300,000 units. Maximum demand for model B, 140,000 units. For model A, to produce 1 unit, I require 0.08 hours. If I now want to do 300,000 units, how many hours do I require? I will multiply by 0.08. I will multiply by 0.1 hours. Please multiply. $0.08 multiplied by 300,000. That will give you 24,000 hours. machine hours. Multiply 140,000, multiply by 0.1. That will give us 14,000 hours. Now, total hours required. $38,000 hours. To meet the maximum demand, we require 38,000 machine hours. Now, compared to hours available, go back to the question. Look at the question, please. Availability of machine hour is limited to 30,000 hours. Total machine hours available, 30,000. We require 38,000 hours. Machine hours. Hours available is 30,000. Do we have bottleneck or not? Is there a bottleneck or not?
There is a bottleneck of 8,000 plus.
Yes. There is bottleneck. Machine hour is the bottleneck.
Bottleneck.
Thank you, ma'am. Machine hours is the bottleneck resource. You are going to specify this. We have confirmed that there's a bottleneck. We can now talk of calculation of optimal production mix using marginal costing. Using marginal costing now. Pick your products, model A and model B. Pick your selling prices. Let's go to this. Costing 60. And we are discussing I'm wondering where is this coming from? Selling price for model A, 1,000. For model B, 1,400. Pick this. ₦1,000, 1,400. Now pick your variable cost. Material cost is a variable cost. Model A 400, model B 500. Variable production conversion cost 100, 300. This is 400. This is 500. This is 100. This is 300. Get your contribution. Selling price minus all variable costs. 1,000 minus 400 minus 100. This is 500 14 minus 800. This is 600. You have gotten very contribution per unit. Now, machine hour is a bottleneck resource. You now pick the hour. Machine hour per unit, 0.08, 0.1. Next, calculate contribution per unit of machine hour. That is, divide your contribution by the bottleneck resource. 500 divided by 0.08. What do we have?
$6,250.
That's on 250 naira.
6,250. 6,250. 600 divided by 0.1. That will give me 6,000. Now do your ranking based on contribution per unit of bottleneck. Model 1 will give us higher contribution. So we are going to rank this first. Then this will be ranked second. Your ranking means that you should produce model A first, because model A will give you the higher profit. Hence, you should start with the production of model A. Done with model, look at model B. When you are done with your ranking, go to the allocation table. Allocation table to determine optimal production mix. Yes, sir. Mr. Latif.
Yes, sir. Good evening, sir. Can you hear me, sir?
Please go ahead with your question.
Hello. Okay, thank you, sir. I just wish that you quickly remove my confusion before we go further. Since this is throughput accounting, not the normal optimal product mix, right? So I think that we should rather use returns per unit for the ranking. That's my own thinking now. And since it is throughput accounting, where the theory assumed that it is only the material cost that is variable cost. So I think it is only the materials cost that should be less from the selling price to get the contribution. Then we now match the contribution with the returns, with the bottleneck per unit. So that's just my own thinking. I don't know if just confused with the including variable costs.
Let me try to restate your comments. You make like 2 comments that I noted. You said the ranking should be based on contribution per unit.
Returns, not contribution. This is throughput. Returns per unit.
Oh, returns per unit. All right. And it's also good you commented. First is, you are going to follow the examiner instruction. Let us refer back to the question. The more reason I always tell students that, please, online class is more stressful, and try to pay attention. Look at requirements A. Examiner says using marginal costing principle, calculate the mix, in brackets, unit of each model, which will maximize the net profit. In this case, examiner is not asking you question on throughput yet. That lesson. Examiner says using marginal costing. So we have not gotten to the question on throughput. So as much as possible, you are going to try to follow the examiner instruction. That was why I tried to explain the meaning of marginal costing. All right. Let's go on with the class. So you are going to rank based on contribution per unit of the bottleneck resource. The bottleneck resource is machine hour. You now come here, allocation table to determine optimal product mix. You come here, maximum machine hour available. $30,000 hours. You now pick your first product, ranking first. Model A. Let's go to model A. For model A, we are going to produce 300,000 units. And machine hour per unit is 0.08. That means we require 24,000 hours. Look at it. We are going to produce 300,000 units at 0.08 hours. That means I require 24,000 hours of machine. Out of 30,000 hours, we are going to dedicate 24,000 hours to producing model A. We are left with how many hours?
6,000.
We are left with 6,000 hours. These 6,000 hours will be used for the second ranking, model B. Let's go to model B. Model B, the demand is 140,000 units. And to produce one, machine hour per unit, 0.1. That means we require 14,000 hours. But the available hours is just 6,000 hours. We require 14,000 hours to achieve the maximum demand for model B. But the machine hours remaining is just 6,000 hours. Now the question is, how many units of model B can we produce with the remaining 6 hours?
60,000.
Thank you. To produce one, it will take 0.1 hours. If I have 60,000 hours, how many can I produce? Look at it. You can show your work here. I have 6,000 hours remaining. To produce one is 0.1 hours. Therefore, I can do 60,000 units of model B. You can come here. We can only do 60,000 units at a rate of 0.1 hour. That will give us 6,000 hours. That means the hours are exhausted. It means that we are going to produce 300,000 of model A, 60,000 units of model B. It means that our mix, our production mix is for model A, we are going to produce 300,000 units. For model B, we can only produce 60,000 units. You have gotten the optimum product mix. That is the mix that will maximize net profit. That is the mix that will maximize the net profit. Examiner says, calculate the mix of each model that maximizes the profit and determine the value of the net profit. You have gotten the mix. Now the maximum profit. What is contribution per unit here? Let's go back. Contribution per unit, 500 and 600. This is 500 naira per unit. This is 600 naira per unit. Now get total contribution.
150 million.
How much, please?
150 million.
60 multiplied by 600.
6 million, 36 million.
36 million. Our total contribution, 186 million.
Discuss.
To get your profit, total contribution minus the fees cost. How much is the fees cost? Look at the question. Fixed production overhead attributable to the manufacture of the two models amount to 40,500,000. You can return here 40,500,000. Then our profit is 186 minus 40.5.
145,500.
145.
100.
145,500. You have resolved requirements A. You have resolved requirements A. Any question? Any question, please? If there's no question, we can move to requirement B. Requirement B. Examiner says, yes, any question?
No, no question.
All right. Examiner says, calculate your
Calculate the throughput accounting ratio model
throughput
and
briefly discuss when it is worth producing, where throughput accounting principles are in operation. Look at the question. Examiner says, calculate the throughput accounting ratio and briefly discuss it is worth producing where throughput accounting principles are in operation. Your answer should assume that the variable cost amounting to 24 million as a result of the choosing production mix in part A is fixed in the short term. Look at that question. Examiner says your answer should assume that the variable cost amounting to 24 million incurred as a result of the choosing product mix in part A. What is the choosing product mix in part A? Look at it. The choosing product mix is 300,000 units of model A and 60,000 units of model B. That is the choosing product mix in part A. All right. Now, if you look at the second part now, the requirement is to calculate throughput accounting ratio. Can you see it now, Mr. Latif? Requirement B is about throughput accounting ratio. You now state the formula. Throughput accounting ratio is calculated as return per factory hour divided by cost per factory hour. Next, your return per factory hour is calculated as throughput return divided by time taken in bottleneck resource. Next, your cost per factory hour is calculated as total factory cost divided by total time available in bottleneck resource. We can go to this now. Calculation of throughput accounting ratio. You have your products, model A and model B. Pick your selling price. This is 1,000 naira. This is 1,400. Your variable cost under throughput accounting, material cost is the only variable cost. Material cost here, 400. Material cost here, 500. Now get throughput return. Return per unit. Throughput return per unit.
900.
This will give me 600 naira, 900 naira. You have gotten your throughput return. Now introduce the bottleneck. Look at it, please. I want to calculate return per factory hour. Throughput return divided by time taken in bottleneck resource. Our bottleneck resource is machine hours. Time taken 0.08 hours. To produce 1 unit of model A, the time taken is 0.08 hours. Machine hours. To produce 1 unit of model B, the time taken is 0.1 hours. You can now calculate return per unit of factory hour. That is 600 divided by 0.08.
7,500.
That will give me 7,500. Then this will give me 9,000. You have got.
Excuse me, come back. Sorry, sir. I don't know. Just come back a little bit, like the calculation you did now.
All right. We want to get return per unit of factory hour.
Yeah.
Our bottleneck resource is the machine hour. To produce 1 unit of model A, you require 0.08 hours of machine. Why to produce 1 unit of model B, you require 0.1 hour of machine. Now to get return per unit of factory hour, return per unit divided by the bottleneck hour, 600 divided by 0.08.
Okay. Yes, sir.
900 divided by 0.1. Is it better, man?
Yes, I understand.
Now, look at the formula for throughput accounting ratio. Return per factory hour divided by cost per factory hour. We have gotten return per factory hour. We now need to calculate cost per factory hour. Formula for cost per factory hour. Total factory cost divided by total time available in bottleneck resource. Let's go to this. Calculation of total factory cost. Remember total factory cost. All other costs, excluding material cost. Total factory cost is all production costs, excluding material cost. You can go back to the question now. Our fixed production overhead, 40,500,000. Then we now have variable production conversion overhead. Let's calculate here. Look at it. Total variable production conversion overhead. Examiner says this should be based on the choosing product mix. Look at it, please. For model B, model A, 300,000 units. For model B, 60,000 units. What is the variable production conversion cost per unit? Look at it, please. Variable production conversion cost per unit, 100 naira and 300 naira.
30 million.
Very okay, 100 and 300.
We come here for model A. This is 100 naira. This is 300 naira. Total, please.
30 million for A.
For A,
30 million. And for B, 18
30
million.
million. For B,
2 million.
18 million.
8 million.
That means total is 1. I'm trying to create more space. All right. That means the total here is 48 million. Examiner now says this 48 million, 24 million is fixed. Look at it, please. Your answer should assume that variable cost amounting to 24 million incurred as a result of the choosing product mix in part A is fixed in the short term. Excuse me, please. Out of this 48 million, 24 million is fixed. Variable cost fixed in the short terms. Out of 48 million, 24 million is fixed. In the short term, in the long run, others will also be fixed. Look at this. 24 million variable overhead fixed in the short run. Other variable production overhead, the balance is 24 million again. Out of 48, 24 is fixed. The balance is 24. Under this method, under the principle of throughput accounting, all costs are assumed to be fixed in nature. All other costs, the factory costs are all production costs, excluding material costs. All the production costs that has been incurred, excluding our material cost, we represent
the Swiss cost.
Our factory cost. So you can now sum up. Your factory cost is all other costs, excluding material. Sum up. This will give me 88,500,000. You have gotten total factory cost based on, look at it, examiner says, based on choosing products mix. Based on choosing product mix in part A above, you have gotten your total factory cost. You can now calculate your cost per factory hour. Your cost per factory hour is equal to total factory cost, 88,500,000, divided by total hours available in bottleneck. Our bottleneck is machine hours. Total machine hours available is 30,000. You can now compute your cost per factory hour. Please compute.
2,950.
950.
How much?
1,950.
2,950.
Thank you, sir. This will give us our cost per factory hour is equal to 2,950. You can now complete your ratio now. Cost per factory hour, 2,950. 2,950. You can now calculate your throughput accounting ratio. Return per factory hour divided by cost per factory hour. 7,500 divided by 2,950.
2.54.
This will give us 2.54.
3.05. 3.05.
Oh, sorry. What do we have? Yeah, 3.05. You have calculated your throughput accounting ratio. You have calculated your ratio. Examiner now says, when explain, discuss, when it is worth producing, where throughput accounting principles are in operation. Examiner says you discuss when it is worth producing goods, when throughput accounting ratio are in operation.
When throughput accounting principles.
Yes, somebody is trying to comment. I can't hear you if you are commenting. Under the principle of throughput, when should we produce? When is it worth producing goods? When throughput accounting ratio are in operation.
Can I try? Okay. Let's say when the bottleneck level ratio is reduced to enable us to get reasonable quantity for production.
All right, thank you. At least you are it is worth producing goods where throughput accounting principle are in operation if the ratio is greater than 1. Look at the comments. Look at the comment, please. Where throughput accounting principles are in operation, it is what producing. Only when the throughput accounting ratio is greater than 1. When the ratio is greater than 1, when the ratio is greater than 1, This implies that the cash generated from the sale of the products is more than the cost incurred. Hence, the product is profitable. And the product is profitable. The only time you are going to produce goods under throughput accounting principle is where your ratio is greater than 1. We are done with requirement B now. Any question, please?
Yes, sir. Please, sir, before you move on to requirement. Okay, sir. So before you move to requirements, can you please set me to go up a bit to where we have the throughput, where we start with the throughput, where there is a return per factory hour. Yeah, I want to check something. Return per factory hour. Return per factory hour.
Well, I'm going back there.
Okay.
Where?
Oh, okay. 100, 600. Okay. My thought is if we have any, now I see that it's not removed, but what I wanted to know is that, in throughput, we are made to understand that only material cost is variable cost.
Of
So
course.
yes, sir. So if peradventure we see another variable, because this one is variable again, variable production overhead cost, variable production conversion cost. It's not telling us his fixed cost, it's not telling us his overhead cost. Me, I was thinking that it would be assumed that it's variable, but since I discovered that you didn't add it to the material cost now, that's why I wanted to find out that and that in case we see another variable cost, maybe other variable cost, should we add it to the material cost in case of another question that have another variable cost? You see, or we should just only use material cost when we are calculating throughput.
All right, you have started well. For throughput, only material cost is your variable cost. Any other cost, you can't bring it in. Your throughput return is selling price minus variable cost. Selling price minus material cost. Look at this place now. The only variable cost we have here is the material cost. I can remove this. my selling price less material cost will give me my throughput return per unit. Is that clear, sir?
Yes, it's clear. I understand now. So,
Variable production conversion cost is not a material cost. All right. We can look at requirement C. Look at requirement C. Using throughput accounting principles, advise management of the quantities of each model that should be manufactured, which will maximize profits, and prepare a projection of the net profits that will be earned by TK Limited next year. Examiner says, using throughput accounting principle, advise management quantity of each model that should be manufactured. To do this, open your schedule, products, model A, model B, pick your throughput accounting ratio as computed in B. The ratio here is 2.54. The ratio here is 3.05. We can use the throughput accounting ratio to determine the profit performance of each product. When you have picked your ratio, you observe that model B is giving us higher throughput accounting ratio. That means model B is more profitable. Hence, we are going to start production for model B. Your ranking, model B first, then model A second. When you are done ranking, go to the allocation table, subject to bottleneck resource. Our bottleneck resource is machine hour. Maximum machine hour, 30,000 hours. The first ranking, model B. The maximum demand for model B, 140,000 units. Hour required to produce 1 unit, 0.1. You are going to produce model B first. You need to produce 140,000 units. at the rate of 0.1 hour. What is the total hour required for model B? Total hour required for model B?
14,000.
14,000 machine hour. Out of 30,000 hours, 14,000 will be dedicated to producing model B. The balance you have here, remaining hour.
16,000.
16,000 machine hour. This remaining hour will be dedicated to the production of model A now. Now look at model A. The demand is 300,000 units. And to produce one, it requires 0.08 hours. Obviously, look at it. Look at this. The bottleneck. Yeah, look at it. The demand for model model A is 300,000 units. And to produce one unit requires 0.08 machine hour. That will require 24,000 hours of machine. If you are to meet the maximum demand for model A, we require 24,000 hours. The machine hour available is just 60,000 hours. How many model A can we produce? With 16,000 hours. Yeah. With 16,000 hours, how many model A can we produce? Model A, 0.08 hours. It must give me 16,000. How many units of B can I produce? You are going to divide 16,000 hours by 0.08. Look at it. For model A, how many can we produce?
200,000.
200,000. That will take 16,000 hours. Hours remaining. At the end of the allocation, hours will be nil. So we have gotten the mix that will maximize profits based on throughput accounting principle. The mix is produce 140,000 units of model B and 200,000 units of model A. For model A, we can only do 200,000 quantity. For model B, we can do 140 maximum demand. Our require here, no. Okay, we have gotten the optimal product mix. We have gotten our optimal product mix. The next calculation is the projection of the profit, maximum profit to be achieved. You now multiply by return per unit.
It's 100 and 900.
Thank you. Throughput return per unit 600 and 900. $600, $900. Totaling $200 multiplied by 600 times. This will give us 120 million. Multiply 140.
126 million.
126. Total throughput return. Sum up total
246 million.
This is your total throughput return. Total throughput. Total throughput return. Now let's total factory cost. Total factory cost this 88 500.
That's 157,500.
The net profit
157.
projection. Net profit projection. 157,500.
500.
Are done with requirement C. Any question, please? We cannot look at requirement D. Examiner says explain two aspects in which the concept of contribution in throughput accounting differs from its use in marginal costing. Explain two aspects in which contribution in throughput is different from contribution in marginal costing. Yes, any opinion?
Okay, sir. Number one is that in throughput accounting, every other cost is deemed to be fixed cost, while only material that is variable cost. So while in marginal costing, we take cognizance of all the costs, all the variable costs, such as direct labor, direct expenses as variable costs.
All right, that is great. That is well, that point is well articulated. She said, number one aspect, under throughput, accounting, comma, contribution is calculated as selling price minus material cost only. All other costs are assumed to be fixed. Why? Okay. I didn't even notice it. I need to create more space. Okay, let's continue. We're almost done. Why? Under marginal costing. Under marginal costing, contribution is selling price minus all variable costs, including direct labor, direct expenses, and other variable overheads. That was the first point she has stated or she mentioned. Examiner say, give me 2 points. Any other points? Let me add one to it. Point number 2. Throughput contribution is higher than marginal cost contribution because only material costs, is recognized in throughput accounting. Only material is recognized under throughput accounting. Hence, contribution will be higher. We are done with this question. Any question for me, please? If there's no question, I think we should stop it here. If I go to the next topic, divisional performance evaluation. Let's stop it here. Please go and digest what we have discussed tonight. Try to digest what we have discussed so far. All right. If there's no question, no comments, may God give us a better understanding. I will be checking out of the classroom. Good night.